If you think you know Uber, you might want to listen up. Seriously. The old image of this cash-burning startup that was just trying to stay afloat, that's completely out of date. Today, we're going to tear into an investment report that argues Uber has become something else entirely. So let's dive into the playbook for one of the most interesting stocks on the market. And this really gets to the heart of it. The big question we have to ask ourselves. Is Uber still just a glorified taxi app? Or has it secretly been building the actual operating system for how everything, and I mean people and things, moves around our cities? Figuring that out is the key to this whole story. All right, let's start with the bull case, the optimistic view. The argument here is not just that Uber's growing. No, it's about a massive strategic pivot. Uber is going all in on becoming a platform of platforms. Think of it like a digital backbone that connects everything from a luxury chauffeur service to getting a hammer delivered from your local hardware store. And look, this isn't some pie-in-the-sky idea for the future. This is happening right now, at lightning speed. Just look at this flurry of activity in a couple of weeks back in early 2026. On March 30th, boom, they buy Blacklane to get into high-end transport. The very next day, they're launching paid robotaxis in Dubai. A week later, they're partnering with Ace Hardware for delivery across the country. And the day after that, they're teaming up with Volkswagen to get self-driving vans on the road in LA. This is a company on the move. You know, the really brilliant part of Uber's self-driving car strategy is how simple it is. They're not trying to build their own cars. Why would they? That costs billions and it's super risky. Instead, they're positioning themselves to be the essential marketplace, the app store, if you will, for autonomous vehicles. It doesn't matter if Waymo's car is better, or Motional's, or VW's, they all want to be on the Uber network to get customers. So Uber wins no matter who actually builds the best robot. Okay, but it's not all sunshine and roses. A good investment case has to look at the dark side too. So let's flip the coin and talk about the real challenges and competitors that are making investors nervous and have been pushing the stock down. And you can see that nervousness right here in the numbers. The stock hit a high of almost $102 back in September 2025, but by April 2026, it had pulled all the way back to around $72. Now that kind of drop, almost 30%, is what creates the potential opportunity, but it's also where all the fear and uncertainty comes from. But here's the crazy thing. Even with the stock taking a beating, the core business is an absolute fortress. I mean, look at this. In the US, their most important market, they have a staggering 74% of the rideshare business. Their main competitor, Lyft, is just way, way back in the distance. That's what you call a competitive moat. Of course, being the king of the hill means everyone's gunning for you, and the risks are real. The report points them out clearly. You've got constant legal battles over whether drivers are employees, which could jack up costs. Insurance is getting more expensive, and you have serious competition. DoorDash is fighting tooth and nail in the delivery space. And then there's the long-term shadow of Tesla, wanting to build its own robotaxi network. And, if the whole self-driving revolution takes way longer than people think, well, that slows down a huge piece of the growth puzzle. So we've seen the good, we've seen the bad. What's the tiebreaker? According to this report, it all comes down to one fundamental, game-changing shift in the business. Uber is no longer a company that just grows. It's an absolute cash flow machine. Just look at this number for a second, $10 billion. And that's not revenue. That's not some fuzzy adjusted accounting number. That is the amount of cold, hard cash the company put in the bank in 2025. This one number changes the entire conversation about this company. So what exactly is free cash flow and why does it matter so much? Well, for years, Uber was famous for one thing, losing money, burning through billions of dollars of investor cash to get bigger. Free cash flow is the total opposite. It's the money that's left over after you've paid all your bills and made all the necessary investments to keep the business running. It's the ultimate sign of a healthy, profitable company. In that $10 billion number, it didn't come out of nowhere. The growth in 2025 was just incredible. Gross bookings, that's the total money flowing through the platform, up 22%. Adjusted EBITDA, a key measure of profitability, up a massive 35%. And that all-important free cash flow we were just talking about, up an insane 42% year after year. The business is firing on all cylinders. So, when you put it all together, the conclusion is pretty simple, but it's powerful. The old story about Uber is dead. This company has made one of the hardest transitions in business. It's gone from being a high-growth, cash-burning startup to a dominant and incredibly profitable tech giant. All right, so what does an investor actually do with all this? How do you play it? Well, the report takes all this analysis and boils it down to a very specific playbook for thinking about the stock right now. The report suggests a pretty interesting two-step strategy. Step one is to start a position, maybe half of what you'd want to own, right around the current price in the low 70s. Then, and this is the key part, if the stock happens to dip down to a key support level around $69, you can add the other half, which would give you a much better average price for your total investment. And what's the prize if you're right? Well, the analysis points to a first price target of about $105, which is right in line with what most of Wall Street thinks. But the long-term target, which is based on all that future cash flow we talked about, is way higher, potentially $150 a share, or even more as that whole self-driving strategy really kicks in. So really, the final takeaway from this whole report is about changing how you think about the company. The idea is to stop seeing Uber as just a taxi app. That's the old view. And start seeing it for what it's becoming, an AI logistics operating system for how we all get around. It's a huge idea, and it might just be the key to their entire future.